The summer break may be just around the corner, but financial markets never go on holiday. And with the bond spreads in Spain widening yet again, there are renewed concerns about the ability of the most indebted Eurozone countries to service their debt. This week, the President of the European Central Bank, Mario Draghi, has visited the Parliament's Economic and Monetary Affairs Committee to give his perspective on the current situation. Mr. Draghi focused first on underlying economic fundamentals, saying that although growth would remain weak in the Eurozone, inflation would decline in the coming year, relieving pressure on prices and wages. Then he turned to the structural adjustment programs underway in some of the most indebted member states. He warned that however tempting it may be to ease up on unpopular measures, national governments needed always to remember why they find themselves in such difficulty.
It was past economic developments and policies that led to excessive imbalances in a number of countries. And it was those imbalances, fiscal, macroeconomic, and external, that were neither healthy nor sustainable. Unsustainable imbalances provide the objective need for adjustment programs, and the degree of the adjustment is directly related to the extent to which policies were misguided.
But Mr. Draghi was also adamant that the crisis has created an opportunity for countries to move towards a closer political and economic union.
We need to move towards a further sharing of sovereignty in the fiscal, financial, and economic domains. There can be no shortcuts in establishing a sound and stable monetary union.
Nevertheless, Mr. Draghi expressed his view that in order to retain the confidence and support of Europe's citizens, any further moves to share sovereignty needed to be accompanied by full democratic oversight, and he singled out MEPs for their role in this respect.
We need to accompany deeper euro area integration with significant progress on democratic legitimacy and accountability. There is no doubt that you and your colleagues, the members of the European Parliament, the directly elected representatives of the citizens of Europe, will continue to play a central role in the steps towards political union.
The question of how to generate economic growth while at the same time cutting public expenditure is perhaps the toughest challenge facing policymakers across Europe. In response to a question from EPP Group spokesman on economic and monetary affairs, French MEP Jean-Paul Gauzès, Mr. Draghi said that the current focus was biased too heavily in favour of tax rises at national level, an approach he said was not sustainable in the medium to long term.
Now, if the urgency is gradually overcome, this fiscal consolidation will have to be, in a sense, call it requalified towards greater expenditure cuts and less taxation. But this is certainly one of the reasons why some of these countries are not seeing the benefits, and actually their economies are now sliding in recession.
Mr. Draghi said the EU had made great strides to develop policies and structures to restore financial stability to Europe. But he said member states have a responsibility to move beyond words towards actions that show a united and coherent approach by all members of the Eurozone.
European monetary union is an integral part of the treaty. This calls on all relevant bodies and actors to engage constructively on improving its functioning, not only at the union level, but also at national level. To call for an impeccable application of the treaty, and at the same time refuse closer union mentioned in Article 1 of the treaty, is inconsistent, to say the least.
Mr. Draghi's views count for a lot, but MEPs, as the democratically elected representatives of Europe's 500 million citizens, are determined to stay at the heart of the EU's response to the crisis. And, yet again, the EPP Group is leading the way. You can find out more about our group's activities on our website, eppgroup.eu. Thanks for watching, and see you again soon.